Hello, and welcome to the Auditor of State's webinar on the notes to the financial statements that are to be filed under the Hinkel system. The Hinkel system is the Auditor of State's annual financial data reporting system. I'm Michelle Weirs, Assistant Chief Project Manager of the Southeast Region of Local Government Services, a division of the Auditor of State.
I'm Justin Sloan, Assistant Project Manager for the Southeast Region of Local Government Services.
This webinar was developed to give a refresher and future reference points for those that were unable to attend our previous trainings on this topic. This webinar is intended to help all local governments, including but not limited to townships, villages, libraries, land banks, park districts, sewer and water districts, and fire districts. If you were unable to attend our trainings and would like the handouts emailed, please email the address at the end of this slideshow. I will point that out when I get to that slide. The handouts are also available on our website. I will be discussing the basic rules and requirements surrounding the notes and how to get started. Then we will go into more detail on each note. We will be using the township handouts in this webinar and pointing out any differences for villages. Justin will be addressing the regulatory requirements, and I will be addressing the OCBOA requirements. OCBOA is the Other Comprehensive Basis of Accounting, also referred to as GAAP lookalike. It is important to know on the onset of this webinar which basis of accounting you will report. I will start now with some frequently asked questions surrounding these note requirements.
Frequently asked questions like, why do I have to prepare notes to the financial statements?
Beginning with the year ending December 31st, 2016, local governments must file full annual financial report, including notes. The deadline for filing is 60 days from year end for non-GAAP filers. So that would include regulatory and OCBOA. And the deadline is 150 days for those who chose to file under GAAP. You can see Auditor State Bulletin 2015-007 for specific requirements for each type of entity.
My auditors have always done this for me in the past. Can they still prepare my notes for me?
Auditors could still prepare these notes as a non-audit service. However, it is unlikely they will be able to do so by the deadline for most governments. Therefore, we encourage the fiscal officers to go ahead and prepare and file the annual financial report, including notes to the financial statements.
If I don't prepare notes for my entity, what's the penalty?
If notes are not included with the annual financial statements submitted to under the Hinkel system, the annual financial report will be considered incomplete and could be subject to non-compliant citations and an unauditable declaration. The notes and the financial statements can be refiled at the time of the audit. However, they will be subject to the same as listed above.
My entity has a 2-year audit. Do I still need to prepare notes for each year?
Yes, local governments are still required to file a full annual financial report, including notes to the financial statements each year, as set forth in the bulletin I just mentioned, 2015-007. The auditors will combine the 2 years in one audit report.
My entity uses UAN. Do I still need to prepare notes?
Yes, you do. UAN entities will be able to meet the filing requirement through the year-end closing process. The fiscal officer should prepare notes to the financial statements prior to completing year-end closing procedures. Further information will be given at UAN year-end training and in the year-end closing checkout list. Getting started with your notes to the financial statements. Shells are available on the Auditor of State website as a Word document. We'll show you that path in just a few minutes. Contact the auditors who did your last audit. That is a really good way to get started with your notes. They might be able to send you their notes file. It would probably be in a Word doc. You can look at your prior audit reports on the Auditor State website for your entity. We are also going to show you that path. We will go over each note and give tips on how to complete them. Remember to customize every note to your entity. If it doesn't apply, you can delete it. You can leave it there as a placeholder and say that does not apply, but if you delete the note, be sure to renumber your notes. Right now, Justin will go out and show you the path of how to get to the shells that we have available. So you go to the Auditor State website and you hover your mouse over local government at the top and then click on reference material. On the left side, you'll see financial statements, shells, and footnotes. This is where it's important to know whether you're going to file OCBOA or regulatory. So for this example, we went into OCBOA. You scroll on down and you pick out your entity type. So we're going to click Township Notes, and you see that they were updated in December of 18. We try to update those every year. The OCBOA shells in this Word document include the most common note disclosures. There could be others that would need to be included if you have something special going on in your entity, but this is a very good starting point and features to follow. I name my notes something different every year, so I usually just change the file name to the year that I'm preparing the financial statements for, and I keep those in case something would happen. You can always go back and copy and paste. The shells are color coded. The yellow highlights are helpful guidance, and the green highlights are generic information, and you'll modify that information to fit your entity. The shells also use current CY for current year and PY for prior year. You can use the find and replace feature within Word to make the years change to the year that you're reporting. You can also change the header. So you want to show them how you can just easily go up into the header and you click there and you just change the year that you're reporting, and it will change that on every page throughout the document. You only have to do it on the first page.
We're going to begin discussing the notes, and we will begin with Note 1, the reporting entity. The reporting entity describes the services that your entity provides. If your entity were to contract for a major service with another entity, you would want to describe that as well. For example, if you were a village that was paying the county sheriff for specific police protection, you would want to make mention of that in your reporting entity note. Or if you were a township that were paying a village for fire and emergency medical services protection, you would want to address that in your reporting entity note. Additionally, if your entity is in fiscal caution, watch, or emergency, you'll need an extra paragraph. Other organizations will address that when we look at notes 14 through 17. Moving to note 2, the summary of significant accounting policies. Most of this note is standard language that you will just leave as is. What you'll address is fund types. Delete any that don't apply. List significant funds under each type with a brief description. As you see here in this sample, we've listed certain special revenue funds like the road and bridge, the police fund, the fire fund, with entity-specific definitions for each one of those funds. Additionally, you'll want to address the budgetary process. Update certain sentences if you had no encumbrances at year end. As always, the yellow highlights will guide you through this process. You will also want to address your deposits and investments in your summary of significant accounting policies. Be sure to modify to fit your investments. If you have any, we will go into more detail on this in note 5. Moving on to note 3, the compliance note. List any budgetary violations that your entity had during the year. List them by fund. These may include expenditures plus encumbrances that exceeded appropriations, appropriations that exceeded estimated resources plus your carryover balance. You may want to list any fund that had a deficit cash balance at year end. Later on, during your audit, the auditors may add certain items that they find that are related to non-compliance items. Moving to note 4, budgetary activity. The regulatory notes have charts for budgeted versus actual activity by fund type for both receipt and expenditures. Make sure you use the budgeted amounts from your most recent amended certificate of estimated resources and for the appropriations for the year being reported. The actual amounts should match your financial statements. And we'll just take a quick look at some examples related to these supporting documentations that you may need. As you can see here, this is the final amended certificate for our sample entity, and you will use the total of the taxes and other sources, and this will be your budgeted receipt number in note 4. And here is a sample appropriation resolution. Our sample uses a very detailed level to appropriate. Since it's quite lengthy, we didn't include all of the pages here, but a summary for all the funds is on the following page. This original appropriation, along with any supplemental appropriations, the total of those will be your appropriation authority. So the total of all appropriations for the year is what you will disclose in your note for appropriation authority. And Michelle is going to discuss the OCBOA notes.
I'm going to have Justin flip to page 54 of these handouts, and that's where the OCBOA samples are. And as you can see, this disclosure is a little bit different than the regulatory basis. There's a chart there that reconciles the differences between the change in cash on your financial statements, non-budget to the budget basis. You can see the modified cash amounts tie to the financial statements, and this is just a little worksheet that he clicked to, and we had to rotate it. And usually the only differences between the amounts are anything that you've pulled on that was unrecorded, like unrecorded cash or interest, and your encumbrances. And if you pull down these handouts, you'll see that he's clicking on these little red boxes. Things are linked, so it goes right back to where we're talking. They're linked to just flip back and forth very easily. So you can use this worksheet, and if you're ever preparing these and you want an actual Excel file or something, you can just get a hold of one of us in LGS, and we might be able to just email the file out to you, so you don't have to just create this from scratch. We can always email something to you. But this is the numbers and where they come from, and what this table is supposed to look like for your budget to GAAP. Well, not really GAAP, but GAAP look-alike numbers. So at the beginning of that note, if you just go back one page, it will talk about what is the difference between the two sets of numbers, the statement of receipts, disbursements, and changes in fund balance, those numbers, and the difference between the budgetary numbers. And like I said before, this is the outstanding encumbrances and any unreported interest. If you don't have any unreported interest, you would take, in this sample, line number 2 out. You would delete that because that would not apply.
Moving on now to note number 5, deposits and investments. The regulatory notes have a chart that lists all of the cash and accounts by type. All accounts of one type are to be added together, so you don't have to list out each bank account. You can just combine them as you see here. The demand deposits are presented in total, along with, for our sample, we have Star Plus. The total of that is our total deposits. Any investments with Star Ohio are presented as follows, and a total of your deposits and investments are presented in this table. Just for reference, this information is going to come off of your year-end bank statement for all of your entities' bank accounts, along with any of their investment statements. So you all should be familiar with what a bank statement looks like. You will be using the December 31st bank statement for any deposits that you may have. Additionally, you will need to include disclosure as it relates to your entity's collateral, be it with pledged securities or the Ohio Pooled Collateral System. Effective July 1st, 2017, the Ohio Pooled Collateral System was implemented by the Ohio Treasurer of State. Financial institutions have the option of participating in OPCS or collateralizing using the specific pledge method. Regulatory filers will need to disclose the method of collateral used by their financial institution. You could inquire with your banking institution as to which method of collateral, or if you're already a member entity that is logging in and checking your Ohio Pooled Collateral System, you could confirm that information there. We will briefly show you how to log on to OPCS so that you can get familiar with it. So if you go to opcs.ohio.gov, it will bring you to the Treasurer of State's Ohio Pooled Collateral System website. Here you'll be able to log in to check your entity's collateral levels. If you are not familiar with Ohio Pooled Collateral System, you will also be able to check out the Frequently Asked Questions and Help tab. And down here under Public Units, you will be able to look at any frequently asked questions or consult their training. And Michelle will elaborate on what OCBOA requirements for deposits and investments include.
Jumping to page 54 in the handouts, OCBOA requirements are a little bit more detailed. First, you will list out all the allowable investments that your entity can have, and then you will have to disclose whether your deposits are insured, and just as Justin had talked previously, the same requirements under regulatory. The only difference is what I'm going to have him do is jump to the notes that we pulled down from the website earlier to show what an updated cash note looks like and all the different requirements there are. So again, right there is a list of all of the allowable investments. You'll modify that to fit your entity. This is a township example. And scrolling on down, this hasn't really changed too much. If you are fully insured by FDIC, we'll go back and show you how you come up with those numbers. If you are in the Ohio Pool Collateral System, you'll just read through here and see what exposure you have, and you can modify that. I just wanted you to take a look at this and see that all this available disclosure is here. So we'll go back to the handouts and show you the worksheet that's been created on page 103 for you to disclose your FDIC coverage. This worksheet will list out all your bank accounts and your year-end balances, and then you'll put the amounts that are covered by FDIC in that column. And FDIC is covered per bank per account $250,000. So you can see here, like Fifth Third, this was probably a time deposit for $250,000. And then say you have a demand deposit. So say the plus account was a demand deposit, you would also have $250 for that. So it would be $500,000 total at Fifth Third Bank. Star Plus is fully insured by FDIC, so 100% of that would be under FDIC. So you can see the total uninsured there, the $9,700,000. That is the amount that's being disclosed in the notes, the financial statements, back on page 54, I believe. We'll go back there and you can see there's the amount that's disclosed, saying that it is uninsured.
Moving on to note 6, property taxes. For regulatory notes, if you don't have any public utility taxpayers, feel free to delete the second sentence in the note disclosure. The sample notes that are provided will be significant enough to address your property tax disclosure, but be sure to tailor for your specific entity as it regards to the public utilities.
For Alcoa, you will need to disclose the full tax rate. Sample of that is on page 57. Here you'll see that there's a table here. The sentence will talk about the full tax rate per 1,000 of assessed value, and then you will have a table actually displaying by types, like residential, commercial, property values, your public utility, personal, and that information can be easily obtained from your county auditor. Normally that's already sent out sometime throughout the year, but you can certainly just request that from your county auditor.
Additionally, if your village levies an income tax, be sure to include that in this note. If you do not have a municipal income tax, be sure to delete the portion of the note disclosure related to that. Describe what types of income are taxed and be sure to include the tax percentage. Look at your most recent income tax ordinance or the ballot language if some of the tax was approved by the voters. If a portion of the tax is required to be used for a specific purpose, be sure to disclose that in the note as well.
So now we will go to a requirement under GASB 77. We'll flip back to the actual note shell from the website, that will show you an example of a tax abatement disclosure. This was required under, again, I said GASB 77, and in a nutshell, it describes any situations that qualify under this disclosure that are monies that have been tax abated.
Moving to Note 7, Interfund Balances. For regulatory filers, you will simply need to describe any material outstanding advances that were not repaid at the end of the year, including the purpose for that advance.
For ACBOA, this note can have two features. One would disclose interfund transfers. The purposes of the transfers, you can either put that in table format if there are just one or two transfers made throughout the year. You can put that in sentence form. If you go to the notes doc, there's some samples there. Here are the transfers listed made in this township throughout the year and the reasons given. And then the interfund balances. These are advances made and not repaid at the end of the year, and it's for everyone made. Regulatory, they just talk about material advances, and ACBOA, we will list every advance made and not repaid. So essentially a payable and receivable at the end of the year, although those amounts are not reflected as numbers on your financial statements, they are disclosed in your note.
Moving now to Note 8, the Risk Management Note. For regulatory filers, the list will include all types of insurance. Be sure to include only those that your village has. If you are participating in a risk pool for insurance, be sure to use and update that section with the name of the pool and what it covers. If by chance your entity is self-insured for a type of insurance, be sure to use and update that section of the note disclosure as well. And we will look at a sample briefly. This is the OTARMA sample, the Ohio Township Association Risk Management Authority. And this is information for your note disclosure. You will want to include the most recent available information. So for this sample, this 2014 statement was the most recent available. Depending on when you file your notes to the financial statements, you may have to present the information in a 1-year lag. So this is just a sample of what this statement might look like, and this is how you will be able to gather the information that you need for that note disclosure. Additionally, on the Auditor of State's website, as we had previously shown you, under financial statements, shells, and footnotes, our office will prepare a fairly comprehensive list of any specialized footnote disclosure. So this could also be a resource for you, and we'll address these further in notes 14 through 18 of our discussion. And I will turn it over to Michelle for discussion of the ACBOA requirements.
On page 57, you'll see the risk management note is a little bit more detailed for ACBOA filers. We actually have a table at the bottom listing, I'm not sure this example actually has that. It's not really in a table format, but maybe the notes are. There we are. You'll talk about the amounts of coverages and the deductibles. The ACBOA requirements just want to see a lot more detail of all of the limits and liabilities.
Moving now to Note 9, the Defined Benefit Pension Plan Note Disclosure. Be sure to include in your notes your entity's participation in either the Ohio Public Employees Retirement System and or the Ohio Police and Fire Pension Fund, as well as any Social Security participation, depending on what your employees may have. Be sure to update the contribution rates for the current year, and if you're using the most recent financial statement shell from the Auditor of State's website, those numbers should already be updated for you, but just confirm that they are before you file your notes to the financial statements.
For OCBOA filers, you will have to follow the requirements under GASB Statement 68. The note example on the website in the Word doc will have the most recent information for that. So if you want to go out to the Word doc, you'll see that this information has been updated. This example, as of December 18, we will have revisions in December of 19. That will include all the updated rates for the pension disclosure. There will be disclosure out there for OPERS and Ohio Police and Fire. If your entity does not participate in Ohio Police and Fire, you will not need to include that. The requirement here, see where this green highlight is, that's the required number that you will need to calculate. It's the contractually required contribution. We have a worksheet that will help you calculate that. So we'll go back into the handout. We'll go to page, I believe, 63. And there's a link here to page 120. And of course, your worksheet will have to be updated for any changes in the rates as far as what goes to pension and what goes to health care. Whether it's 13% and 1% or 14% and 0% to health care, that will have to be updated based upon what is in the note disclosure in the notes doc. But this will still show you how you come up with the amounts for your contractually required contributions. And you just toggle back and forth in between those.
Moving on now to Note 10, the Post-Employment Benefits Note. Once again, you'll want to include note disclosure for participation in the Ohio Public Employees Retirement System, and if applicable, the Ohio Police and Fire Pension Fund, depending on participation by your employees. Again, be sure to update the percentages for each year. If you are not using the most current sample from our website, you'll just want to update those percentages yourself.
For OCBOA, the new requirement is GASB Statement 75. That was implemented starting in 2018. The notes doc has been updated for that requirement. Again, you will disclose the contractually required contribution, and you've already used the worksheet for the previous note for the pension portion. The healthcare portion, which we refer to as OPEB, is also going to come from that worksheet. I want Justin to show you how these Word docs are set up. So go into like a table where it lists all the different employee types that they can have in the pension, probably in the pension part. Okay, so these are Word documents, and we have Excel spreadsheets embedded in there. And you'll just click on there, and then you can get rid of the employee types that you don't have. Say you don't have public safety, so you can hide those. You can hide those rows, those lines, and that will no longer appear in your document. So say you only have state and local, you would hide everything else, and then that would be the proper presentation for your note.
Moving on now to Note 11, the debt disclosure. Be sure to describe various debt obligations that your entity has, including bonds, notes, loans, and leases. Regulatory filers, in the first chart, you're going to want to include the amount of outstanding debt at the end of your year, at December 31st, as well as the interest rate. And in this sample here, you will see the entity has listed all of the outstanding loans and leases that it has, along with the principal balance that is still outstanding at the end of the year, and the associated interest rate with that debt obligation. This information should be available from the amortization schedules or the official statements related to your debt obligation.
For OCBOA, there's a little bit comprehensive table presentation on page 65. Maybe it's on 60. Yeah, 65. And you'll see here that in the table, you will show the prior year balance of the debt, anything issued during the year, the amounts retired, and then the balance at the end of the year. So you have the prior, issued, retired, and the balance, and you also have to disclose and present the due within 1 year. That's basically the amount of the principal portion of the outstanding debt that is due in the following year. Those amounts in those columns should tie to the tables that follow, listing the future principal and interest requirements. So as you can see on this Locust Lake loan, 2016 principal for the following year was $15,073. And if you go back up to the table, that's the amount that's due in 1 year. So that's just a little bit different from the regulatory. Both the regulatory and the OCBOA, you are required to present the principal and interest payments remaining on the debt. You can list them in 5-year increments, so you would have the first 5 years all by themselves, and then if it goes beyond 5 years, you can group 5 years together, principal, 5 years together, interest, and present that in one line. Our notes doc may contain a sample of that. We'll look there, I'm not real sure. It just condenses some of the presentation. Yeah, you can see in this sample, there's 5 years listed out individually and then in 5-year increments.
Moving on now to Note 12. This is the construction and contractual commitments note disclosure. This is where you will list any significant construction or other contractual commitments that you may have. For example, if your entity at the end of the year had $81,000 worth of outstanding contractual commitments related to the construction of a fire station, for example, you would want to disclose that here in this note.
For OCBOA, we're going to jump to page 67. And the requirement there, yes it is to list the year-end encumbrances also. This example doesn't have any contractual commitments because there aren't any. But for this one, you will list your, by fund, your year-end encumbrances. We'll jump to the notes doc to see if there's also an example of contractual commitment note. No, it just says list any potential. So it's the same as the regulatory. You'll just want to disclose any major contractual commitments and the amount that had been already spent during the year.
Moving to note number 13, your contingent liabilities note. These are items that could impact your entity's financial position in the future. Examples would be any lawsuit that your entity may be involved with, any grants that may be subject to audit. We would suggest that you ask your entity's legal counsel, whether it's your village solicitor or county prosecutor, whoever you contract with or whoever you are required to use as your legal counsel, have them write a letter indicating if there are any legal issues that could impact your entity's financial position. If so, you would disclose that here in note 13, the contingent liabilities note. Moving on to notes 14 through 17. These notes relate to organizations that your entity may be involved with. Each organization will need to be analyzed to see if it fits the definition of the types in notes 14 through 17. The definition of each type is listed in the shell, so it should serve as a starting point for you in preparing the disclosure. A good idea would be to look at prior audit reports to see if you had any note disclosure and use that as an example. Additionally, you could look at audit reports of other entities within your area, a larger city, for example, a county, or any school districts. They may be members of the same organizations that you are, and they may have the note disclosure that you need for your report. If by chance none of these pertain to your entity, be sure to remove the disclosure and renumber the notes accordingly. And as we touched on earlier in the notes presentation, the specialized disclosure for these notes can be found on the Auditor of State's website under the Other Specialized Footnotes tab. Moving now to note 18, the related party transactions note. This is where you will want to list any transaction that meets the definition listed in the shells. It is the opposite of an arm's length transaction. There are a couple examples in the shells, but if you aren't sure whether your situation applies, be sure to consult with your solicitor or legal counsel. You could reach out to us at LGS, or you can ask your auditors.
Note 19 is not required for regulatory filers. This is an OCBOA presentation that's required. If we go to page 69 of the handouts, you'll see the required presentation for this note. You will break down each line of the individual fund balances. So fund balances on your financial statements will have presentation for restricted, committed, assigned, and unassigned. It's possible that you won't have any committed amounts. It's possible not to have any assigned to amounts if you don't have any purchase orders at year end. But more than likely you will. And basically each line of this table represents an individual fund or a combination of funds. But they need to be descriptive of what the fund's function is actually doing. And these will tie, like I said, back to your financial statements. There's an Auditor State Bulletin that can assist you in developing this note. The Auditor State Bulletin is 2011-004, and it can help you classify your funds when you're creating your financial statements in the first place, and then this will help you with your descriptions of how to create this note.
Moving now to note 20, the subsequent event note disclosure. This is where you will want to disclose any significant financial events that happen after the end of your year, after December 31st. Examples include the issuance of new debt, a new levy or other major revenue source, or major expenditures that are known after year end. Now, it is important to remember that the notes to the financial statements, along with the financial statements themselves, should be filed within 60 days of year end. So it is entirely possible that you will not have any significant subsequent events to disclose. In that case, be sure to remove the disclosure and renumber the notes accordingly. Included in our sample is Note 21, AMP Ohio Revenue Coverage Note Disclosure. This applies to any village who is a member of the Ohio Municipal Electric Generation Agency joint venture. If you are a member of that, you will want to include this note disclosure here. We've left it as a placeholder, but for townships or other entities who may be watching this webinar, it will not be applicable to you in your financial statements.
Note 22 is a note for OCBOA filers. It's the change in the basis of accounting or a restatement of net position or fund equity. You can see a small sample of this on the note stock from our website. This normally only occurs when you are switching from the regulatory to an OCBOA basis, or if you decide to go from regulatory to GAAP or OCBOA to GAAP. So here's the sample of a change in basis of accounting. It could be pretty lengthy and sometimes hard to figure out where the numbers come from. We can always assist you. Scroll on down, you'll see that there's a table that will list the changes from what you had previously reported to what you have chosen to report in the current year. So this one, for example, is saying, well, we're going to go from reporting fund balance, cash basis, and including inventory, prepaids, interfund receivables and payables, even to capital assets, long-term debt, and any internal service fund activity. So this sample is going from cash regulatory basis to a GAAP basis. Note 23 and anything beyond that we have in the slideshow, it's for an OCBOA basis filer. There's a disclosure in there about reporting your capital assets and whether you have any component units.
We're moving on now to discussion of the Hinkel system. Everyone is required to use the Hinkel system to file their financial statements annually. If you use UAN, filing will be part of your year-end closing process. For non-UAN users, an entity-specific link will be emailed to your address that the Auditor of State has on file, and you will follow the link within that email to file your financial statements. The link is entity specific and it is only usable for the current reporting year. So every year you will receive a new entity specific link for that particular reporting year. Within the Hinkel system, you will need to disclose financial data as well as certain demographic information that is entered into the system. A full copy of your annual report, including the required financial statements and the notes that you have prepared, must be uploaded as one single PDF file. If you have questions regarding the Hinkel system, on the Auditor of State's website, under Local Government and Hinkel System Annual Financial Reporting, you will find information related to preparing notes to the filing. You will find frequently asked questions. You will find an inquiry form and general guidelines along with more reference materials, including a quick guide. The quick guide is useful for the filing process. For our example, we've been working with a township, so I will go ahead and just briefly take a look at the quick guide for township filing. So when you receive your entity-specific email, you will follow the link and it will bring you to a page that looks similar to this. You will click the Begin Filing button. And now this is where what Michelle had touched on earlier, you will need to know whether or not you are a regulatory cash based on the information that I've been walking you through, or an OCBOA filer as Michelle had been walking you through, or if by chance you are a GAAP filer, which would require different note disclosures than you have been following along with. So you will just update the financial information from your financial statements into this shell, and then you'll input any debt obligations, any demographic informations. The quick guide will be handy in walking you through what is prepared, but the final portion of the Hinkel filing will be uploading the full financial statements, which will include the notes to the financial statements along with your actual financial statements in one single PDF form. The final portion of the process is creating a PDF file, and we will walk you through how to prepare a PDF file if you are not familiar with the process. The most common software to create PDF files is Adobe Acrobat. There are other software programs that you can access for free. We have provided a small list here of free PDF programs that you could use in preparing your financial statements in a PDF form. Each software may work slightly differently, but typically what you will want to do is to print to create a file, and we will walk you through how to do that. So if you look at your notes, for example, if you were to click File and Print, if you are using Adobe Acrobat, you should have the option of printing this to a PDF file. And from there, you will just want to save it in an area that you can easily access with a name that is easy for you to find. And what you'll want to do is you'll want to do this for your notes as well as your Excel financial statements, and then you'll want to use a PDF file, whether it is Adobe or any of these other software programs that we've listed for you, and combine those two statements into one financial report. Additionally, you could also print off the entirety of your report and scan it in as a PDF and submit that to the Hinkel system. That will also be sufficient to meet your filing requirement.
For the OCBOA filers only, a management discussion and analysis, which we refer to as an MD&A, can be included in your financial statements. It's not required, but it's strongly encouraged. The MD&A is a document that goes at the front of your financial statements, and it gives an overview of the entity's financial picture for the year. You can talk about things that are negatively impacting your entity as well as positively impacting your entity. It includes tables and narratives, comparisons from the prior year to the current year, describing significant changes from year to year. So if you go to your handouts on page 32, this starts the MD&A on page 32, and table 1 will present your net position and compares it from one year to the next, and then below it you can talk about reasons for any changes. Table 2 is a presentation of your receipts and disbursements, And then under that table, the requirement is to talk about any changes, usually the significant changes, and why they happened. If you just merely say it went up 400,000 or it decreased 400,000, that's not fulfilling the requirement of the MD&A. The reasons for the fluctuations are what they are looking for. The MD&A will also talk about the individual township funds that are significant in nature, so your major funds. So if almost always your general fund, it will be any significant funds, whether they're enterprise funds or special revenue funds. You will talk about all your major funds and significant changes there. You will also talk about the general fund budget, whether there have been significant changes, increases, or decreases in your estimated revenues and your appropriations. If you have outstanding debt, you will also have a table to present any debt and the outstanding balances. And then at the end of the MD&A is a presentation for in an area where you can talk about the current I'm not sure what you call it, just current events that are happening to your township. This MD&A has chosen not to include that, but that's an area where you can discuss things that are happening in your township, not plans. The MD&A's requirement is that it has to be currently known facts, not predictions or hopeful events for the future. The MD&A is unaudited, but your auditors will read it and offer suggestions or changes. They will make sure that the numbers within your MD&A tie to your financial statements. This slide will give you the number where we can be reached if you have any questions. This is the LGS phone number and the email where you can send an email and our office will send out the information that you're requesting, the question that you have, to an LGS person in your geographical location. If you have any questions, do not hesitate to reach out to us. Thank you for your attention.